how do we scan? And when do we do it? So what we do is when you get a new month, you want to know that the first Friday of that month, it happens every new month, you will have a jobs report. So a lot of times the market will be lackluster until the first Friday of the month. And that's just something you want to know. And then when you're going into a new month, like we said before, you want to look at the 3-2-2s, you want to look at the 3-1s, you want to look at the 2-1s, and you can also look at, let's say, what's an outside month. Because if it's an outside bar on the month, it tells you the monthly participant was aggressive. They're willing to sell it down and buy it up. So once you have a 3, if that goes 3-2, you're going to want to know about that. And you can do the same thing across other time frames. So once you go into a new week, you want to know what's a 3-2-2 week, what's 2-1, what's 3-1 on the week, what went outside last week. And when you look for these setups, you then want to look the first day of the month, what's going in force? Because the first signals to trigger at the beginning of the month, you have the rest of that month to reconfirm that break. Because if the monthly signal's in force, that's one actionable signal that you have to tell you you can expect price to move. Let's say you're looking at the 5-minute chart on whatever stock you're looking at. If all the time frames are green and you see a 5-minute hammer 2-2 reversal, that 225er gives you a second actionable signal to expect price movement at that point in time because you already have the month. So what we look to do is use every other time frame below the month to confirm what the month is doing or negate it. So if the month goes 3-2-2 hammer, such as like let's say Amazon, if that goes 3-2-2 right on the beginning of the month, we have the rest of the month to buy that to the upside because it's a monthly signal. So you'll see that happened right here. So we can just buy that and that worked. Then you'll notice you get the slight lower lows back here. They go 2-2. They do stop you out by the gap down 2-2 right here. So you had to get out when that went and reversed. They did hammer back though. So you can buy that again, look for this new high. And if it stays up there, we can see if it keeps going. So on this one specifically, there wasn't many daily signals. How do we get in on something that doesn't have daily signals? Well, the signals will come across the lower time frames. So you can see inside 60 and up here, that's able to go and make a new high. That's a way to get in it. So any signal that reconfirms the month, such as this inside 60 here, will reconfirm the month, this hammer here. And not every single one's going to work, which is why we use a tight stop. And we also want to look for corrective activity first, because if we go down here, if I'm going to buy this 3, 2 down, 2 up 60, that's a red 3. So that tells me people got short. So if I buy this here, it should go take that out. You'll also see another 2 down, 2 up right here. And what we look to do then is if it doesn't come back to entry, you want to hold it since you got all month. So if we take this, does come back. If you take this, does not come back to entry. You can see a 2260 does not reverse, doesn't come back. And you can go and do that the whole entire time. So like this was a potential 3. This was the monthly signal. So you can see big 3, slight lower low, 2 to the upside, never comes back. You go on the 30s. You're going to see 30s up. You can see a 3-3-2-30, and it looks like there's some chop shop in here. And the reason you can do this is because you've got all month and you want to let them do that. So if we go and look at anything else that's doing it, you can see IBM does that. SYK did that. You can see Netflix did that. And the other way you can then scan is you can look for what's in force and just go and look to confirm that. So we want to start the month with a list. We want to scan and see what's actually triggering on that list and what's triggering that wasn't on the list. And then each week we'll have a series that goes throughout the week. So Monday afternoon, after Monday's trading, you want to look at inside days. You want to look at rev strats, hammers, and shooters. And you want to know, is that going to confirm the initial weekly move or is it going to negate it? Because if you have, let's say the market goes 2 up on Monday, anything inside on the day was too weak to rally with the market. So it's either going to go inside and up and start rallying with the market, confirming what Monday did, or when the market pulls back on Tuesday, they'll all go inside and down and negate what Monday did. And that's where the losing positions would be. And the same thing with the rev strat. Let's say the whole market rallies on Monday. You're looking at something that went inside and up and then created a shooter. Now, if things were to give back gains on Tuesday, that's a rev strat to the downside. That would negate what we know. And if you were to confirm, we would look for things to the upside. So on, let's say, Monday night, if you have a 1-2 down hammer and everything rallied on Monday, Tuesday in the morning, you want to see the 1-2-2 because that would negate the guys who try to get short and you'd squeeze them out. So that's what you want to do Monday afternoon. And then Tuesday afternoon, you want to know, is there an FOMC or a Fed? Because if there's FOMC or Fed, you want to look at financials, which would be the XLF. And then you also want to take a look at not just the banks, but you want to look at like the financial processors and stuff like that too, see if those are moving. And we can then also, Tuesday afternoon, going into Wednesday, you want to know about energy names because you have every Wednesday energy numbers that come out, and that's going to change what they know to be true about the energies. So the second 60 of the day, every Wednesday, energy numbers come out. And then what we also want to do Tuesday afternoon is take a look and see how many signals are actually in force across the market. What has a long red or long green bars on the week and month? And then what's inside on the week at that point? Because let's say you go in Tuesday afternoon, you're looking at it, and you have 100 stocks inside and up on the week, and maybe they're spread across, let's say, utilities and then consumer staples and technology. It's like, okay, we have these 3 sectors all going up, and there's 100 of them doing it, so they're buying everything. It's like, that would be good to know. And that means you have all week for them to do that since it's a weekly signal. And long red or green bars just tell you they're buying. So if we went to crowd, and this is why we said crowd, we want to know about that. So before this gap up occurred today, it was trading at 215. So like right here, it was trading 215. Was that month bright green at that point? Yeah. Are they buying this month? Yeah. Is the month over? No. So that's why we expect gap and go, because it gaps up and that tells us, wait, the news was good. And then it opens, it goes green, and that tells us they also think the news was good and they buy, right? So it's really important to know when things have long red and long green bars, because that's what we want to be trading. And the best trades are going to happen on the things that you can see the nice long red and green candles, because that shows you aggressive participation. And comparatively, you can like zoom back and say like, notice the trading in here, how bad that is. Notice how good it gets, right? So when you see these bars happen like this is what you want to stick on and continue trading every day. And if we went to like XLK Tech this week or this month, you can say they bought tech all month. So that's where all the really long green and red bars were occurring. So that's what you want to look for. And then the last one was inside weeks. What's inside? Because let's say a whole sector goes inside on the week. When it's inside, it's doing nothing. So let's say this is a weekly chart. If you're looking at XLK, this is inside like that. You're nowhere near taking that out or that out. So do we trade that? No, not at all. In fact, you go and look at it and you say, if it's inside a week going into like, let's say the second half of Wednesday, I don't even want to touch it. I don't want to look at it because it's doing nothing. And if you can do that, you can stay out of the things that aren't moving. So you get everything that's moving and everything that's not moving, you know, to stay away from. And that's all you have to do. And then every morning, what we look at is the gap list as well, because that'll tell you what potentially is changing. So like this morning, we saw a lot of gaps in the technologies. And that's why we're sitting on ZS and crowd. And we nailed both of those this morning. So for example, ZS, 2 down in green, long green bar. What does that tell you? They're buying, right? Second day, or actually Wednesday, confirms what we know to be true by going 2 up. They buy again, right? And they do it on a gap as well. So if you go on the week, bright green at that point. You go on the month, look at that. Nice. And besides that, I mean, there really isn't much. That's what we look for. There it is.